Hey traders, it's John Fortune here of this week's weekly Forex Forecast. I hope you're having a great weekend. Let's start with the DXY as we always do. Now last week we had an interest rate decision out of the US and we had FOMC. And we had a big rally in the DXY, we had a risk-off move, and this was because Jerome Powell, the chairman of the Federal Reserve, came out last week, and as opposed to saying that they weren't even thinking about raising interest rates, he came out last week and confirmed that they were now at least talking about raising interest rates. And this shift towards a more hawkish tone saw risk-off moves coming into the market last week. We had a strengthening of the DXY, strengthening of the Japanese yen, and we saw a decline in some of the indices last week as well. Now the weekly Forex forecast last week was primarily positioned for a risk-off move, and we did take out both targets to the upside in the DXY last week. So very simply put, going into this week, I am looking for further advances in the DXY, and I am looking to continue the theme of risk-off sentiment and moves going into the markets next week. So very simply put, any pullback in the DXY, and we've had a huge rally, so I would like to see a correction first. Any pullback in the DXY will be viewed as another opportunity to look for further advances in this index up towards the next key of resistance, the upside the target set at the 92.70. So I do go into next week with a bullish bias on the DXY, and it means not only do I favor dollar strength positions going into next week, but I think they will be some of the best positions in the markets overall next week. Next is Euro-Dollar. Now Euro-Dollar was a market that I highlighted to the downside last week. We started the week in this area and I was looking for a target of the 1.19960. We traded straight into this, but because of the strength of the sell-off, we actually traded quite a bit past it. This just goes to show how strong the sell-off was in Euro-Dollar, or conversely, how strong the rally was in the DXY last week. Going into this week, I do like this market once again for further declines. Any correction will simply be viewed as an opportunity to once again look for bearish reversals and bearish positions in this market, down towards the next key of support to the downside and the target set at the 1.1795. Next is Aussie Dollar. Aussie Dollar was another market highlighted in last week's weekly Forex Forecast video. And I highlighted the fact that we had a double top confirmed in this market. So we started the week right here. And I was looking for a sell-off into the 7622 and also the 0.7572. We did have a really nice sell-off, taking out both of these targets to the downside. Very simply put, I do like this market for further declines once again this week. We are coming quite close to the target. We've had such a big sell-off that I would like to see a correction in this market, and any pullback is going to be viewed as another opportunity to look for bearish reversals down to the next key of support to the downside and the target set at the 0.7451. The next market is New Zealand dollar. Now New Zealand dollar was also highlighted last week as one to watch to the downside. I was looking for short positions and we traded into the target set at the 0.7071 and the 0.7004 last week in New Zealand dollar. Going into this week, I do like this market again for further declines to the downside, and any correction, and we do need to see a correction, markets don't move in a straight line, so any correction is going to be viewed next week as another great opportunity to look for bearish reversals in this market, down to the next key of support to the downside and the target set at 0.6842. US dollar Swiss franc. Now US dollar Swiss franc confirmed a double bottom reversal last week on the FOMC move. Really nice move to the upside. I am looking for further advances in this market. Any correction will be viewed as a great opportunity next week to start to look for bullish reversals into the next key of resistance, the upside and the target set at the 0.9319. Next is pound dollar. Now last week FOMC broke pound dollar out of this very choppy sideways correction. It's why it wasn't featured in last week's weekly Forex forecast. When the market is choppy like this, we just want to be allocating capital elsewhere into markets which are moving. And we also broke out of this uptrend. So going into this week, very simply put, now we've had this big sell-off in pound dollar. Any correction in pound dollar will be viewed as an opportunity to look for bearish reversals down to the next key of support to the downside and the target set at the 1.3707. Next is gold. Now gold reversed lower last week off of FOMC, and this steep sell-off is pointing to further declines in this market. We are coming fairly close. We're not super close, but we're fairly close to the target. So any correction in this market next week is going to be viewed as an opportunity to look for bearish reversals down to the next key of support to the downside and the target set at the 1739.71. Next is silver. Now silver also sold off as we had that risk off rally in the DXY last week. We broke this head and shoulders pattern. We actually broke it slightly earlier, pulled back, retested, and then the sell-off was FOMC. I am looking further declines in this market next week. Any pullback, and we need to see a correction, so any pullback is going to be viewed as a great opportunity to look for bearish reversals, and the deeper the pullback the better, as we get better risk to reward to the target. Any bearish reversal is going to be viewed as an opportunity to look for shorts into the next key support to the downside and the target set at 25.63. We are quite close to the target here, so in any of these charts when we're very close to the first target, just remember we may come down, take out the target first and then pull back, and if that's the case, we're going to be looking down towards the second target, in this case the 25.12. Next is Bitcoin. Now Bitcoin is an interesting one because ever since we broke the 47,044, and for those of you who follow me on Twitter, you'll remember once we were sitting right at this level, I did warn of the dangers of a potential crash below this level, and we did have a big sell-off once we came through here. And if you look at the structure of this reversal, it looks like we have the classic head and shoulders reversal followed by a deep wave 2, an extended impulsive wave 3, and then a sideways wave 4. When you factor in a strong dollar, it does suggest the much higher probability in Bitcoin is for a further decline and a fifth wave now in this market. So going into this week, any pullback in Bitcoin would be viewed as an opportunity to look for bearish setups down towards the next key support to the downside and the target set at the 30,000 level in Bitcoin. Next is crude oil. Now crude oil is a market that I have been trading to the upside. It's an inflationary trade and I do have a target to 73.12. I do still think we're likely to see 73.12, and any pullback in crude oil would be viewed as an opportunity to look for bullish setups into the 73.12. However, any advances in crude oil would be a risk-on move, an inflationary move. So with a stronger dollar, which is going to weigh on oil prices, is this the best opportunity going into next week? I think there are better markets out there to trade. I prefer primarily to be looking at those risk-off moves next week. However, I do still think we're likely to see the 73.12. It's just not one of the best markets going into next week. Next is the SPX. Now, with Powell coming out and discussing the fact that they were talking about raising interest rates, we did have a sell-off from the previous high. We failed to break above this. And going into this week, I do have a bearish bias on the S&P 500. Just bear in mind, this is not the same as trading Forex pairs. This does not mean you should necessarily go out and short the S&P 500 next week. It may be the case that if you are looking for long setups in the market, you just sit out on the sidelines of the indices next week. It may be that if you are looking to trade individual stocks in the S&P 500, you look for bearish setups in those stocks next week. Or it may be that if you are long and this is part of a broader portfolio, you decide to take some more defensive measures going into next week, or you look to hedge out some of your risk. So any pullback in the S&P 500 would be viewed as an opportunity to look for further declines down towards the next key of support to the downside and the target set at the 4118.38. Next is the NASDAQ. Now we took out the target to the upside at the 14067.42 in the NASDAQ, and I mentioned the fact that once we took out this target, we had this 1, 2, 3, 4, what looks like a fifth wave. We run the risk of a sell-off. We have not yet reversed, as we have done in the S&P 500. However, this is now at a point where we could see a reversal in the NASDAQ. And again, that's information that can be used in various ways as discussed in the last chart of the S&P 500. So this is more of an update just on last week, what we looked at. I would not be bearish on the NASDAQ just yet because it hasn't reversed lower, but I also would not be interested in long setups in the NASDAQ as I think we could see a sell-off from this area. So something to think about going into next week on the NASDAQ. And the final indice we're going to look at this week is the Nifty. Now last week we were looking for a pullback towards the 15433 for further advances to the upside. We did have a nice pullback. Any continued correction would simply be viewed as another opportunity to look for bullish setups in the Nifty up towards the target set from last week at the 15987.45. Now Nifty has been a very good market. We've taken out multiple targets to the upside in previous videos. And although the uptrend is still intact, just bear in mind, if we do get a sell-off next week in some of the US stock markets, we may see this spill over somewhat into the Nifty as well. So with the remarks from the Fed last week, caution is advised on all of the stock indices next week. And I do think that the Forex pairs and especially the DXY long positions will actually provide the better opportunity to make money for short-term positions. Moving on to the yen pairs, I do like the yen pairs going into next week. They also provide potential risk off setups. We had this big sell-off in Aussie yen, and I do think we see further declines just as we looked at in some of the DXY pairs. Any correction in this market will be viewed as a great opportunity next week to start to look for bearish reversals down towards the next key of support to the downside and target set at the 81.49. New Zealand yen also saw a big sell-off last week as we saw that risk-off mentality coming into the markets. I do think we're going to see further declines, so any pullback in New Zealand yen is going to be viewed as a great opportunity to look for bearish reversals, and the deeper the pullback is always the better. Down towards the next key of support to the downside and the target set at 75.63. And the third yen pair we're going to look at is CAD yen. Also saw a big sell-off, and it's the third of those commodity currency versus safe haven asset dynamic pairs. Any pullback in this market, just as Aussie yen and New Zealand yen, will be viewed as a great opportunity to start to look for bearish reversals down towards the next key of support to the downside and the target set at the 86.99. Pound Aussie, this was a market highlighted in last week's video. We came very close to the target and started to pull back, so for anybody not already involved, any pullback in this market will be viewed once again as an opportunity to look for bullish reversals into the next key of resistance, the upside and the target set from last week, the 1.8521. Aussie CAD, a market highlighted in last week's video. I did highlight the double top for you and was looking for a break below the confirmation point. We have now confirmed this double top, so any pullback, and we've already retested the confirmation point, so for anybody not involved, any pullback will simply be viewed once again as an opportunity to look for bearish setups into the next key of support to the downside and the target highlighted from last week, the 0.9255. New Zealand franc, last week I highlighted the 0.64464 as an area to look for a pullback and a potential reversal. We did pull back and test this, so for anybody not involved from last week, any pullback once again towards this level would be viewed as another opportunity to look for bearish setups into the next key of support to the downside and the target set from last week, the 0.6368. And last but not least, New Zealand CAD, another market highlighted from last week, which I do expect, like New Zealand franc, to take out targets this week. I did highlight the 0.86971 for you last week, and we pulled back and retested this. We've just stopped shy of the target, so for anybody not involved from last week, what we need to see is a correction towards this level once again, and that would be another opportunity to start to look for bearish entries down to the next key of support to the downside and the target set from last week, the 0.8593. So that is it from me for this week, guys. I do see risk-off sentiment coming into the market after the Fed remarks last week. For that reason, I do favour dollar long positions or dollar strength positions and also yen strength positions primarily next week. I do think there is potential for sell-offs in the stock indices, and some of those indices like the SPX and also the Dow Jones, which we looked at in last week's video, have already turned bearish. So caution is advised with the stock indices next week. With that said, I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.